The Indian markets reacted quite positively in the last week. Global cues were very supportive. The geopolitical tensions have gone down in a very drastic manner. And to aid things, the Brent crude cooled off in a very dramatic fashion. Brent crude hovering at 102 created a spurt in global markets worldwide, and the Indian markets were no exception. So from the lows that we had witnessed, the Indian markets bounced back and closed about the 7,900 mark on the Nifty. Moving forward, our take is that the result season is now out of the way. The markets will now look for new direction and triggers. And there are a few triggers that are now keenly missing into the markets. If I have to name a few, the government policies which are expected to drive the markets forward, the reforms will take some time. The Exchequer has made it very clear in his speech a month ago that it will take at least a quarter for the governments to start formulating policies. And once these policies starts getting formulated, to implement the same and getting them on record will take some time as well. So policy formulation is some time away. And when you look at the macro data, the inflation numbers were on the higher side, but the core inflation has stabilized both on the CPI and the WPI. So that is a healthy sign that the inflation might have dropped off. And in that sense itself, I think the inflation might cool off in the quarters to come. Coming to the IIP and the GDP numbers, again, I think the IIP numbers have showed a little bit of a dip in the months gone by. But again, clearly, I think with manufacturing activity resuming and with confidence coming back, the capex cycle should revive in the coming quarters, which should give a huge boost to both the public expenditure and the private expenditure, boosting IIP in the coming quarters. So all the macro factors are driving towards a very positive sign for the markets from a medium to long term. But the short-term triggers for the market are very few and far apart. So we'll be looking forward to any kind of triggers that the government might bring over the next 2 to 3 months, if there are any. Clearly, I think corporate earnings over the next 2 quarters will also drive the markets. And geopolitical and geographical news in terms of the international markets and the movements in the US region and the Euro region will drive the markets forward. And coming to the result season, I think the result season were more or less in line. The private sector banks performed extremely well. Asset quality was quite stable. The disappointment was a little bit with the public sector banks, with a few exceptions. So Bank of Baroda posted a good set of numbers. State Bank of India had a mixed set of numbers. Axis ICICI posted a decent set of numbers. HDFC Bank has always been a consistent performer. Coming to the NBFC space within the financials, Indiabulls Financials posted a decent set of numbers. LIC Housing posted a decent set of numbers. Pharma and IT were very resilient in their earnings. Their cash flows are very strong, and going forward as well, the cash flows will remain strong. So I think a part of your portfolio, as we were mentioning earlier as well, should be allocated towards qualitative names within the pharma and IT space, specifically names like Infosys, TCS, HCL Tech, from the top tier IT names. From the pharma names, Sun Pharma, Lupin did post a good set of numbers. Lupin did surprise on the EBITDA front as well. So Lupin, Sun Pharma can be held on to your portfolio. Dr. Reddy's is a conviction buy at our end, where we believe the valuations are very supportive. And from the mid-cap pharma space, Dishman Pharma is one stock that we are liking. Capital goods infra did disappoint because a lot of expectations were laid out in terms of policy expectations. And clearly, I think on ground, we've seen the results of L&T, BHEL, Thermax, ABB. They have clearly disappointed because the activity on ground is yet to pick up, the orders have yet to pick up, and subsequently, I think the cash flows will take some time to improve. However, within this space, I think L&T on declines as a portfolio pick with the long-term horizon can be looked at on tips. From the road players in the infra side, Sadbhav, IRB posted an excellent set of numbers. So Sadbhav, IRB, ILFS Transportation can be some of the scripts that can be looked at. Coming to the mid-cap theme, we've just initiated coverage on LG Balakrishna & Sons, which is an indirect play on the two-wheeler segment, supplying automotive chains, and we find the valuations very attractive. MM Forgings on declines can also be looked at. And similarly, the tire stocks, I think something like an Apollo tire is good here, can react very well to the numbers going forward because of raw material prices have gone down. It will greatly aid their EBITDA margins. So I think all in all, I think the results were more or less in line. One has to take a stock-specific action when it comes to the Indian equity markets. Our take is that from a short to medium-term perspective, the markets might stay in a range, probably between 7450 to 7950. But again, I think any dips that you get into the market can become excellent buying opportunities in specific stocks that we've discussed. So happy investing and hope that the markets will scale new high in the months and quarters to come.